Good evening, everybody. This is Terry Ryder, founder of hotspotting.com.au, and this is my once a month only live broadcast, the live Q&A, your opportunity to ask me your key questions about real estate issues or problems, or if you're like most people, you want to ask me about locations that are of interest to you, whether you own property in that location or whether you're thinking of buying in a particular location. We normally do the live Q&A on a Wednesday night, and Tuesday night is usually reserved for our report of the week. We're going to do both in one tonight because there just aren't any Wednesday evenings available to do the live Q&A. They're all taken. Tomorrow night, for example, Wednesday evening, the 11th of December, is going to be what we're calling our virtual summit. It's going to be a live free webinar in which we're going to feature conversations with all of the 9 members of our panel of partners. So 9 experts in different fields of endeavour are going to be part of our lineup, and I'm going to be having conversations with each one of them in turn. Some of them are buyers agents, mortgage brokers, development industry experts, investment advisors, people who are expert in property management, people who are expert in depreciation issues, a whole range of topics which are of vital interest to people considering property investment. A great opportunity to get some ideas of what you should be thinking about doing with property investment in 2020. So tonight I'm going to kick off with a report of the week while I'm waiting for you to key in your questions. Got any questions you want to put to me about locations or about issues of concern about residential property around Australia? Key them into the comments panel in front of you, and I'll do my best to answer if at all possible. In the meantime, while we're waiting for the questions to start rolling in, I'm going to be here for the next 60 minutes or so. So please give me your questions. In the meantime, I'm going to feature what I normally talk about on a Tuesday evening once a week, which is the report of the week. And this week we've just published the Christmas edition of our bi-monthly newsletter, which is called the Ryder Report, because I personally write this 25-page newsletter, which is a national overview of what's going on in major markets, major issues, things that I think property investors need to know about across Australia. It has feature sections at the beginning, including a couple of hotspot areas that we feature in every edition. We have a section where we analyse what's going on with prices and rents in the major markets around the country. We have a section called Terry's Tips. We have a section which I write in each edition called The War on Misinformation. We could write 25 pages every edition on that alone, but I'm confined to a single page in the bi-monthly editions of the Ryder Report. And then in the second half of each edition of this bi-monthly newsletter, we have our state-by-state commentary, where we look at all 8 states and territories, their capital cities and some of their regional areas as well, looking at the major issues, the major stories, locations that are of note for various reasons. We also feature a section where we highlight the major projects, both infrastructure and property developments, are happening in each of those states and territories, because we think that's really important, knowing as we do that real estate markets fundamentally derive from what's going on in local economies. So it's very important to know about what's being spent on infrastructure. The markets around Australia that have had the biggest growth in recent years have been those, not coincidentally, that have been spending the most on major infrastructure, transport infrastructure, universities, hospitals, etc. Sydney and Melbourne have been spending really big, particularly Sydney, and that's been a major factor in driving the economic growth that's precipitated the several years of strong price growth, notwithstanding the correction, but it's now rising again, it seems. If you're out there and you would like to ask me a question about location, it's kind of helpful if you can perhaps give me more than just the name of a suburb, particularly as what I know to be true across Australia is that quite often you put in a suburb name and there's actually half a dozen suburbs that are named around the country, and it's very hard to know which one you're talking about. But to give it a little bit of a context, describing what you're particularly interested in can help me give you a useful answer. So please type in your questions. If it's true to form, most of the questions that I'm going to get are going to be about locations. That's what normally happens in my live Q&A. That's okay. I know that people are fundamentally very interested in locations where they own real estate or where they're thinking about buying, and want to know whether the areas that they're thinking of are places to go. So please type in your questions. I'm happy to answer. It doesn't have to be about location, of course. You can ask me about the issues that are of concern to you. There's all sorts of issues in various states in South Australia, recent changes to land tax, in Queensland, proposed upcoming changes to the rental laws, which are highly favourable to tenants and pretty onerous to landlords, at face value at least. Changes to the marketing master plan units in New South Wales. Lots of issues like that out and about at the moment. So if you've got any questions about that, I'll do my best to answer them. But yeah, happy to answer any questions that you have about location. So the first question that has come in is concerning Parkdale in Victoria, and I'm assuming we're talking about a suburb of Melbourne. I'm just getting my bearings. So we're talking about a suburb that's a Bayside suburb. This question from Shazza. Interested in what I think about Parkdale. It's one of those suburbs that appears to have held up pretty well in the recent post-boom correction. Melbourne went through about 4 years of strong price growth, generally speaking. It wasn't the same in every Melbourne suburb, but anyway, across the board, Melbourne had 4 growth years. The last 18 months has been what we'd call the post-boom correction, and we're now seeing evidence that prices are starting to rise again. Locations that stand out for us, we look at suburbs like Parkdale and all other suburbs in Melbourne from a number of standpoints, and one of the things we're interested in is the ones that have shown resistance against the recent downturn in prices. And Parkdale, at first glance anyway, seems to be one of those, Shazza. It's what's typically the case for a Melbourne suburb at the moment is that their median house price will be down quite substantially in annual terms, but there may be evidence of growth in the most recent quarter, which shows that that area, like Melbourne generally, has shown a turnaround in the last few months, having dropped in the previous 12 or 18 months. So when we find suburbs where they've actually shown a different pattern, prices haven't dropped or haven't dropped much, it would indicate it's quite a strong and resilient market. Parkdale appears to be one of those places. Its median house price of almost 1.3 million. It's dropped only about 1% in the last 12 months, which suggests it's a resilient market. Sales seem to be kind of equally divided between apartments and houses. So the apartment market's quite prominent and is quite affordable. We're talking about a Bayside suburb, not far from, it fringes Port Phillip Bay. Its neighbours include suburbs like Beaumaris and Cheltenham, Mentone. Quite a good area. What you'd call middle market, I guess, in Melbourne, sort of median house price a little bit over $1 million. But what appears to be attractive is that apartments are well, in terms of the median price anyway, well under half the median price for houses. So it instantly presents as a market where young buyers, downsizing, retirees, migrants from overseas might be interested in that area for its very affordable apartments, meaning apartment price $475,000, showing some uplift in the most recent quarter, which again is a bit of a trend we're seeing in Melbourne now. So that's all in its favour. I mean, I don't know this market intimately, but it just sort of presents as a good, solid, steady performer, and got some credentials, including being Bayside. Vacancies about 2.8% according to the latest figures, so that's acceptable without being fantastic. An area with lots of schools, and that's certainly in its favour. Just looking, I've just got my trusty book of maps open here so that I can have a feel for the area. There are a lot of very significant number of schools in there, and that might be a major attraction for people buying in that area. Yeah, I mean, it just seems like there's a real cluster in a couple of parts of this suburb, and it's near neighbours. And there's also a golf course in the area, and of course beachside. So yeah, not a bad place to own real estate, I would imagine. Caroline saying 2 houses in Bowen. Again, I'm assuming number of Bowens, Bowen Hills in Brisbane, the Bowen Base in central Queensland. I'm assuming you mean the town of Bowen in, I guess, generally in the Whitsundays area of Queensland. And you're asking, should I sell or should I hold? If I sell now, I'll make a loss. Well, I totally understand where you're coming from there, Carolyn, because Bowen is one of those Queensland markets where, because of the impact of the resources sector, it became a kind of a boom market some years ago. And then when the resources investment boom went kaput, and markets like Bowen, many others also, vacancies rose, rents fell, prices fell, and quite a lot. And so people who bought sort of towards the peak of that resources investment boom that impacted Queensland and Western Australia in particular, were left holding properties that's with a current market value less than they paid. So the big question is, do I hold on, ride it out, or do I cut my losses and sell? But of course, if you do sell, you're taking quite a big hit. Currently, according to the figures in front of me, the median house price for Bowen is $260,000, but the figures indicate that the median price has dropped less than 1% in the last 12 months. Perhaps that's indicating that the worst is over. Certainly there are many locations like Bowen that had a boom and then a bust in connection with the Queensland resources sector. The thing about Bowen is it's a major export port where a lot of coal is Abbott Point, just outside of Bowen, and that's been part of the reason why it had a boom. And then when that all went south in terms of the resources investment boom, places like Bowen, many others as well, suffered a severe downturn in their property markets. Many of those markets are now coming back. We're starting to see a rise in sales. In some cases, vacancies are right down, much lower than they used to be, and we're seeing prices rising again. So that's happened in Emerald, for example, in central Queensland, Moranbah, a coal mining town, and others as well. We're starting to see regional centres like Mackay coming back strongly, Rockhampton showing signs of recovery as well, Gladstone showing glimmers of sign of recovery. I guess the prospects for Bowen depend on whether the controversial Adani coal mine goes ahead, because again, it will have some impact in terms of the rail line and export, that project and others which seem to be cranking up. So probably I would suggest that Bowen's about to come into maybe better times. I'll just check if you held on this long, it might be worth just hanging on a little while longer rather than sort of taking a loss by selling now. Let me just check. We're talking about postcode 4805. I'll just see what the current. Okay, so the thing that's probably most in your favour, Carolyn, is that vacancies are now down to acceptable levels according to these figures. There was a point when the resources investment boom really went kaput, vacancies rose well above 10% in the Bowen market, and even as recently as 12 months ago, vacancy was still 6 or 7%, but now they're down to 2.5%, according to SQM research. So that being the case, when vacancies drop to that level, then rentals can start to rise again. And generally, that's a precursor to prices starting to rise again. Now, if some of the big resources projects proceed as planned, then Bowen's is going to get some upflip. So without knowing your personal circumstances and how much this might be hurting you financially, I'd suggest that if you've held on this long, if you hold on a little while longer, you might actually start to see some uplift rather than taking a big loss by selling now. That would be at face value. Again, always at caution. I'm not qualified to give financial advice, and I don't know your personal circumstances, but I can just tell you what appears to be happening in that market, and I suggest there's some improvement on the way. Greg is asking about Karingal, which is a suburb of Wagga Wagga. I don't have any particular views of the individual suburbs of Wagga Wagga because that's getting a little bit too micro for me in taking Greg a sort of trying to be informed about suburbs, towns, cities right across Australia. And it's hard off the cuff to be really well informed about an individual suburb in a regional city like Wagga Wagga. I'll tell you that I like Wagga Wagga generally speaking. It's one of those really good solid regional centres. That's the major city for a wide region. I guess we're talking the Riverina region, if memory serves. It's quite a lot going for it. We like regional centres that have got diverse economies, and Wagga Wagga has that because it's got both a RAF base and an army base, and that's a huge part of the economy. It's got big medical facilities. People from a broader region tend to retire into places like Wagga Wagga when the time comes because they want to be close to the hospital, for example, closer to those sorts of services. So it's a strong place. It's kind of a safe place to own real estate. Karingal, one of the suburbs that you're referring to specifically, median price about $320,000. It's increased 3 or 4% in the last 12 months. So there's a bit of growth happening there, including in the most recent quarter has been a further 1%, according to the figures in front of me. Rental yields for houses about 5.5%. So you'd say that it's a solid market, showing some steady growth and good rental yields. Let me just check 2650 on the vacancies, because it's always important, I think, as a general rule of thumb for people out there as property investors or prospective property investors. One of the things you always need to be very mindful of is vacancy rates. Trends with that can be a precursor to what's going to happen with prices. If vacancies rise a lot, then I'm pretty sure the prices are going to fall. If vacancies were high a couple of years ago, but now they're down to, say, 2%, then that's a sign that the market's in recovery, that rents are going to rise and prices will follow. So right now, according to the figures from SQM Research, the postcode of which Karingal is part is a vacancy rate of 1.2%, which is very low, and that would tend to underpin rentals and in turn prices. So it looks like a pretty solid place, whether you, Greg, you're somebody who owns property there or whether you're thinking of buying there. Lisa Jackson is asking, which area of the Gold Coast would you recommend to buy a house? Okay, well, Lisa, firstly, happy to hear that you're interested in buying a house and not a high-rise apartment on the Gold Coast, because I certainly wouldn't, generally speaking, recommend, Surfers Paradise high-rise, for example. Not a very good performer on capital growth, one of the worst in the nation, in fact, over time. That market just tends to attract so much new supply, really big mega projects constantly being built, and the new supply, and quite often oversupply, tends to drag down values. But the Gold Coast is very much a growth city, and it's being pumped up by major spending on infrastructure in recent years, the light rail stages 1, 2, and further stages to come. as being one of many factors that have helped keep that economy vibrant, keep the population growing at levels well above national averages. The Gold Coast has been a national leader on population growth for decades and continues to be very strong. Parts of its property market do perform quite well, but the parts that do are the inland suburbs, the housing market, the genuine market. So that the high-rise coastal suburbs are about speculators and tourists, as far as I'm concerned, whereas the real people actually live and work on the Gold Coast, the real residents there, they tend to be living in houses in some of those inland suburbs. So I would be looking, if you wanted to buy a house, at least on the Gold Coast, and give yourself the best chance of having some growth over time, I'd be looking for a good, solid, reasonably affordable residential suburb with good, what I call good bones for real estate. Now, close to important things like the train line, for example, whether it's the light rail Gold Coast line, or whether it's the commuter train line that connects right up to Brisbane. So those would be factors I'd consider. Proximity to that, proximity to all the fundamentals, big shopping, like the Robina Town Centre, for example, is a massive sort of retail complex, lots of services and major shopping there. Those sorts of factors. Proximity to that is the sort of thing that's important to people who are sort of real estate buyers, home buyers. Whereas investors seem to get lured to the high-rise apartment market, which I think is not very smart investing. But you're going to get a much better result, house on land in a good solid suburb with close to public transport, schools and shops. So that's as a general rule. I wouldn't nominate any individual suburb as being better than the others. One area that might be worth considering, sort of a little bit inland, north of Surfers Paradise, sort of inland, the sort of general Southport area. There has been quite a bit of apartment development in that area recently, but it's also more of a real suburb, and there's a lot of infrastructure there, university campus, hospital, big things coming up. And when you've got that kind of infrastructure in your midst, it tends to generate a lot of demand for residential property, both from buyers and tenants. So those are factors to consider. Genuine housing market in suburbs where there's lots of home buyers and not a high percentage of investors, and close to infrastructure, particularly new infrastructure. That's the sort of thing that's going to generate growth. So those are the factors I'd consider. Mark Norris is Cairns a buy. Look, it's not a hugely compelling one at the moment, Mark. I mean, there's plenty of locations, regional cities in Queensland that are showing uplift that I would say worthy of consideration. The Sunshine Coast is top of my list at the moment. It's not just because I live there, near there, but because it's just such a compelling economic growth story with massive things happening, and it's driving growth in the property market. Mackay is another one, Central Queensland. That's a market that was previously in downturn because of the impact of the resources sector, but there's other things to the Mackay story, agriculture, tourism. They've got the Qantas Pilot Academy. That's going to be a big creator of jobs. Vacancies have dropped from very high to very low. Rents, the rental market's very competitive. Prices are rising. So Mackay, Rockhampton showing signs of recovery. Townsville, I think, is going to have a major upsurge when it gets beyond current problems. Lots of infrastructure and planning, big, over $20 billion worth of stuff in planning. Some of it started, like the new stadium in Townsville, was looking like recovering, and then they had the big, massive flood in February, was a setback. But once everything starts to happen that's in planning for Townsville, it's going to have a surge. So that's worth considering. But Cairns, Mark, doesn't really stand out. It's a good, solid regional city. It's, I guess, more fundamentally reliant on tourism than some other places, and that's not necessarily, that can be a great thing, but it's not always a great thing. I'd say that there would be if you're thinking of buying in regional Queensland, there's better places to consider, and some, including some of the ones I've just mentioned: Sunshine Coast, Mackay, Townsville, and a few others. Okay. Do you recommend the Ripley region for house and land buyers? A little concerned about the fly and flood zones in the area, and if it would be, PARS, I think it is. So I assume when you say Ripley, you're talking about the new development area in Ipswich City, in the sort of the southwestern fringe of the Brisbane metropolitan area. Yeah. Would I recommend it? Look, one of the things that when people ask me questions like that, the question I often think that runs through my head is this the absolute best place that you could buy as an investor anywhere in Australia? Because the whole of Australia is your market, unless you're buying for a home. But most of the people will ask questions on the live Q&A are people thinking investment. So if you are an investor, you should be thinking all of Australia. Where's the best place? Where's the absolute best place I can invest my money right now? Now, is Ripley, suburb of Ipswich, the answer to that question? I would suggest, well, no. Not for me, it's not. Also, it's an area where there's massive amount, it's a new suburb being created, a new precinct. Just a short number of years ago, there was really very little population there at all. It's one of those areas, lots of land available, zoned for residential, so master plan communities are happening, and they're going to evolve over 10, 20 or more years. There's lots of land, so there's lots of potential for new supply to come and compete with what you might buy a block of land or a house and land package. Lots of competition is going to come. There's lots more going to replicate what you've just built or bought. So that's not going to really help capital growth thrive. I would perhaps be, as an investor, looking for an area where there's less of that factor, a more established suburb where there's existing infrastructure, there's not a lot of land available, so lots of new stuff can be built. Good infrastructure, public transport. That's the other thing about these new development areas like Ripley. Right now, there's not a lot of infrastructure there because it's not until a certain number of new residences are established and the population grows to a certain point, are you going to start to get the schools, the public transport, and the shopping facilities that people want to have close by. So you're going to get all of that in an established suburb, and you're likely to get less of that factor where there's lots of land supply that can compete with your product and suppress capital growth. So I would suggest being a little bit cautious about that strategy. Okay. Joanne's asking, beachside suburb on the Gold Coast, or should I look instead at the Sunshine Coast? Well, firstly, I wouldn't necessarily on the Gold Coast be going beachside, particularly if you're thinking high-rise apartments. Generally speaking, not a great performer on capital growth, particularly downtown, Surfers Paradise, that area. Stay away from that. If it's a beachside suburb, maybe one of the southern suburbs where you're getting a house rather than a high-rise apartment, might be worth considering. But generally speaking, I think from this point forward, you're going to be getting a lot more growth on the Sunshine Coast and the Gold Coast. The Gold Coast has certainly been big in the past, still big in terms of economic activity, infrastructure spending, and population growth, and that all sounds great. But the thing that suppresses capital growth is they constantly oversupply the market with high-rise apartments, and that drags everything down. We're seeing that happen again and again. Sunshine Coast has that factor much less so. It has an apartment market, but we don't have 50, 60-story mega towers being built all over the place. On the Sunshine Coast, it's much more understated. Plus, its economic story is far more compelling right now. The Sunshine Coast is maybe where the Gold Coast was, I don't know, 10, 20 years ago. It's really starting to evolve as an economic story. Big things happening, more than $20 billion worth of infrastructure under construction or on planning. The airport's going international, the subsea international internet cables coming in from Asia, new medical precinct, $5 billion work in progress, an evolving and expanding university, and they're building a new CBD on 53 hectares in the heart of Maroochydore, the most central suburb of the Sunshine Coast. And all of that's just generating enormous activity, bringing new people into work, creating jobs, new residents coming in. That's driving the property market. And it's really just beginning. That's the thing about the Sunshine Coast. It's really in the early stages of a major evolution. So if I had a choice between the two places, Joanne, I'll be going Sunshine Coast every time. And as you say in a more recent comment, Joanne, yes, I do like the Sunshine Coast. And I can't, you know, some people have accused me of bias because I live near the Sunshine Coast, but I would point out that in the not too distant past, I have included the Sunshine Coast in one of our negative products. All of our products are advocating the good places to buy, except one, which is the no-go zones report, which is the ones where you shouldn't buy. And the Sunshine Coast has featured in that report in the past a number of times, even despite the fact that I live in that region. But a lot has changed since those days. That's 5 or 6 years ago. Now it's very much a growth economy and a growth market. So, and I think the growth that's happened there in prices, particularly at the upper end of the market in the last 1 to 2 years, would tend to vindicate the faith that I'm expressing in that as a growth market. And as I say, I think it's just beginning. Greg, thank you for your thank you. Joanne, thank you again. Okay, so I think at this point I'm up to date with the incoming questions. Please keep them coming. My God, we've been going for over half an hour already. It's amazing how time flies when I'm talking non-stop to myself, it seems, although it would appear that there are people out there listening. But generally, this live Q&A is scheduled to go for 60 minutes. Often we go longer because there's questions just keep coming in. I do have a bit of a time restriction on me on this occasion, so I'll be probably shutting it down pretty much 60 minutes after I started. So we've got another about half an hour to go. So you've got more questions, please let me have them. Happy to answer them. In the meantime, just going back to what I kicked off with, which I'm combining report of the week with the live Q&A this week because tomorrow night, when I would normally be having the live Q&A, we're actually having a live webinar, which we're calling the Virtual Summit, because I'm going to be having conversations one-on-one with a series of experts. 9 different experts are all on our panel of partners. We're going to be spending about 15 minutes talking to each one about different aspects of real estate investment, and particularly with a view to what's coming up next year. What are the prospects for 2020? What do you need to be thinking about if you're thinking about Sydney, Melbourne, or other major markets around the country? If you're thinking about the problem of getting finance and the myriad options that are out there. First up tomorrow night in the Virtual Summit, I'll be talking to Louise Lucas, one of the leading mortgage brokers in Australia, who knows the ins and outs of the different finance package deals that are available out there. There's so many of them. It's impossible for mere mortals like you and me to keep up. That's why we all need to consult a mortgage broker. Buyers agents, development experts, property advisors, depreciation experts, property managers, and we also have James Dawson, who helps educate people about commercial property investment, which is an alternative that we don't often talk about with hotspotting because we very much focus on the residential market. But James is on our panel because he is teaching people about the pros and cons of investing in commercial property as opposed to residential. Okay, Peter, you're asking about Gage Brook in Tasmania, and well, I do know a little bit about Gage Brook. I wouldn't say I was an expert, but I know where it is. It's a suburb of Hobart. It's, I guess you'd have to say, a very down market suburb of Hobart. But here's the thing. I'm glad you asked the question, Peter, because it's an opportunity to make an important point for real estate investment. And this is the way I often express it. Ugly real estate often grows in value, and it often goes quite prolifically in the right circumstances, because and I call it ugly real estate. I'm talking about down market suburbs that tend to have a bit of a bad reputation. They're stigmatized, and a lot of people will go, well, why would anybody want to live there? Well, a lot of people do want to live in places like Gagebrook, both as renters and as buyers, because it's affordable. And not everybody can afford, middle market or upmarket suburbs. Most people out there are restricted by their budget in terms of what they can buy and where they can buy it. So suburbs like Gagebrook and Hobart get steady, consistent demand because they're affordable. And now, just to give you an indication of we're talking about a capital city, Hobart, and it's a capital city where prices have grown the most in the last couple of years, well ahead of what's happened in Sydney and Melbourne, which have actually been trending down until very recently. The median price for Gagebrook is $210,000, and that's despite the fact the median price has risen 17% in the last 12 months. Now, the average annual growth rate is often worth looking at when you're considering is an area worth buying in, because it tells you, does it have a good capital growth record? Now, Gagebrook, its average annual growth, this is the average growth in its median price over the last 10 years, so it's a long-term growth average. It's 8% a year. So you can imagine how cheap houses would have been 10 years ago, because right now it's 210,000. But that's a very good capital growth record. That would be equal to the best of any suburb in Sydney and Melbourne following their recent booms. A capital growth average over 10 years of 8% a year is right up with the best. And so Gagebrook has achieved that, still very affordable. According to these figures, the median rental yield is above 8%. So as an investor, there's plenty to be attracted to there. You've just got to be aware that it's very down market, and it's probably got a reputation of being a problem spot with problem tenants. Quite often those sorts of reputations are exaggerated and unjustified, but that's the way some people think. As an investor, I'd certainly be prepared to consider a place like that, because very affordable, good growth record, great rental yields. Let me just check on the vacancy rate just to see whether that completes the picture, because Hobart, generally speaking, has the lowest vacancy rates by far in capital city Australia. The vacancy rate is 0.2% in that postcode, so virtually nothing available for rent. And imagine anything that does come up for rent, it's going to be, people are going to be competing for it because it's affordable and there's not much available in the area. So yeah, there's plenty to recommend it. You just got to be mindful that it's down market, and yeah, just keep that in mind. But it shouldn't, you shouldn't discount it because it's stigmatized and down market. Look at what it's achieved in terms of growth and the sort of rental yields you can get. What I would say is that the best time to buy in Hobart was, say, 2 or 3 years ago. It's had 3 years of good growth, and it's all the evidence is that it's past its peak. So not the optimum time to be buying there. I'm not sure, Peter, whether you already own there or you're considering buying there. But if you already own there, you probably had good growth and you're getting a good rental return. If you're thinking of buying there, I'd suggest that, well, as an investor anyway, that it would have been the best time to buy was 2 or 3 years ago, and it's past its peak. So it's probably not going to get a lot more growth from this point onwards. Bateman's Bay in New South Wales is another location that I'm being asked about, and I have to confess, I mean, I know where it is and I know what it is, but I just don't know much about it, I have to confess. So just some basic figures. Median house price a tick under 400,000. Median apartment price about 350,000. Median apartment price has risen quite a bit in the last 12 months. median house price down about 2%, but quite a small market. There's only been 22 house sales in the last 12 months and only 30 apartment sales. So, you know, a small market. So we're talking South Coast, New South Wales. And it seems to me primarily it's about retirement and tourism. And like, I could be wrong. Like I said, I don't know enough about that area, but if my assumption is correct that it's, you know, fundamentally about retirement and tourism, those sorts of markets don't tend to produce sort of sustainable long-term capital growth. You want to buy in areas that have got, you know, particularly in regional areas, that have got more diversification for the economy. What's going to create jobs? What's going to drive growth? If it's just a place that people go to retire or to go there as tourists, there's not really driving capital growth much. And when you look at the long-term capital growth rate for Batemans Bay, it's the 10-year growth average is about 3.5%. It's not a disaster, but you'll recall just a moment ago I was talking about a suburb, a down market suburb of Hobart, where the 10-year growth average was 8% a year. This is 3.5% a year. And that would tend to be a little bit typical of sort of coastal enclaves that, you know, beautiful place to live, great place to retire, lovely lifestyle, relaxed, lovely beaches and all of that. So you can imagine being very happy living there. But for investment, again, the fundamental question always to ask when you're considering an area, is this the absolute best place that I can buy as an investor in Australia for capital growth and good rental returns and safety and all of that? And I would suggest that Batemans Bay would not be the answer to that question, unless, you know, you're buying an investment with a future view to, this is where I want to retire when the time comes. Then, you know, that's a different set of parameters. Jackie, would the South Coast New South Wales be a good investment? Shoalhaven area. Yeah, the Shoalhaven area. Now we're talking about. I've just been talking about Batemans Bay. Shoalhaven's not that far away, but we've actually recently done a report for a client on that area, looking at places like Narra and Ulladulla, and there's more to the economy there. So it's a better proposition than sort of just a kind of a Sleepy Hollow, beautiful but not particularly dynamic economy market, small town, coastal town. The Shoalhaven region generally has a lot more going on. It's an economy. So, you know, it's an economy that has growth. It's attracting government investment. It's creating jobs. So there's more underpinning a place like that than perhaps a place like Batemans Bay. Those are the sorts of things that you need to consider. You know, what's going to drive capital growth in an area? Maybe a beautiful area, wonderful beach, but where's the growth going to come from if you're buying as an investment? What's going to drive? And growth comes from a dynamic local economy and from, you know, one that's creating jobs and bringing new people to come in and live and work there. That's where those are the sorts of markets that provide good, strong, long-term sustainable growth. And the Shoalhaven and, you know, also in that area, Wollongong generally, good places to consider because there's so much more diversity to the economies, bigger population centres, new industries being created, jobs being created. Those are the things to consider. Okay, Peter. Oh, yes, you were asking about Gagebrook. You already own? Well, okay, good for you, Peter, because of, I don't know how long you've owned in Gagebrook, but, you know, in the last 12 months, according to the figures I've got here, up 17%, and over 10 years, up 8% a year, which is great. So if you bought 5 or 6 years ago, real cheap, you've had some pretty good growth, and you probably got, as an investor, really good rental returns as well. So hopefully it's done really well for you. All right. Alison asking about Cameron Park near Newcastle. Righto. So near Newcastle, is it in, Alison, are we talking the Lake Macquarie local government area there? I'm just not totally sure, but we'll call it up and see if it answers that question. Yeah, I think it is probably a suburb of the Lake Macquarie. It's either in the city of Newcastle or the Lake Macquarie local government area, which was a neighbour of Newcastle. It's all kind of one big metropolitan area to a certain degree. Cameron Park. Look, I mean, you have to say that a great place to buy, say 3 years ago. Newcastle, that area has generally had some pretty good growth lately, but it's past the peak and it's sort of tapered off. It's going through a bit of a lull phase, I would suggest. But generally speaking, Newcastle as a whole has got a great future. It's really one of the biggest cities in Australia. It's bigger than some of our state and territory capital cities. Strong economy, diversified, lots of infrastructure spending. Long term it's going to be good. So any suburb of that area that's got the basic bones, as I call it, good infrastructure, shops, schools, public transport, all of that, it's going to do okay. At the moment, the figures suggest what I'm saying about Newcastle generally is true of Cameron Park, and that it's shown a slight downturn. Its median price has dropped about 1% in the last 12 months. So it's not falling a great deal, but it's not growing either, because Newcastle, a couple of years ago, if we looked at the figures, a lot of suburbs were up sort of 10% or more. But that phase has now passed for that general area. Long-term growth rate about 5% a year. So it's been solid, but not brilliant. Again, I suppose it depends why you're asking the question. Do you own something there? Are you thinking of buying there? If you have owned property there, you've probably done it okay in the last few years. If you're thinking of buying there, it's probably a market that's sort of past its peak for now. It'll come again. And if you're thinking of buying there as an investor, keep asking that same question. I would urge everybody to ask when you're considering an area, is this the absolute best place in Australia that I can invest, $500,000? And you want to be very sure that the answer is yes if you're picking that particular location, and examine your reasons why you might be considering that area. So I think that's just a very important question to ask, generally speaking. So there's been lots of good questions this evening that have thrown up some, not only answers about the specific locations, but important fundamental principles to be aware of. One of them was very important to look at the vacancy rate trends. Now, you can go to a very good website to know about SQM Research. Great business, created and run by Louis Christopher. He's been around real estate research for over 30 years. I really like his work. His website, SQM Research, you can go there, free information like vacancy rates for any postcode in Australia, and other information that's important, useful for property investors. But you can use that kind of tool to check out what's the vacancy rate in an area I'm considering, and look at the pattern. If it was, if it's really low, if it's below 1%, for example, it's a really tight rental market. Rents will be rising. Prices are almost certainly going to follow that trend, because rents tend to lead. If it's a market like, say, Mackay in central Queensland, where, say, 3 years ago vacancies were 5 or 6%, now they're 1.4 last time I checked. So it's gone from being oversupplied to be very undersupplied. And I know from visiting there earlier in the year that the rental market's really competitive. Rents are rising and prices are responding. And there's reasons, local economic reasons, why all of that's happening. But you can get some clues by looking at vacancy rates. Another lesson we learned was looking at an area in a suburb of Hobart that's very down market and stigmatised, but it's shown great growth in the last 12 months and over the last 10 years. great rental returns, and the person who asked that question, if they've owned there for 5 or 10 years, will have done, feeling they've done very well. And it's an example that down market areas in the right circumstances can show really great growth because they're affordable, and affordable places attract consistent demand because most people can't afford to buy in Toorak or in Vaucluse. So always keep that in mind. All right. Alison, what about Banksia Beach on Bribie Island? Well, I suppose I would. Look, Bribie Island's a pretty good place. Let's face it. And you know, I think what I say about that area, Alison, would, not quite the same. I was commenting a little bit earlier about Batemans Bay. The thing about Bribie Island is it's very close to, some major growth areas. I mean, it's not far from the Sunshine Coast, but it's also more, I guess, closely linked to the northern outskirts of Brisbane, like the Moreton Bay local government area, which is a very strong growth economy, and a good place to consider buying real estate as affordable. There's growth drivers there. But Banksia Beach itself, it's kind of like, it's, as the name suggests, it's a beachside area on Bribie Island, which is actually connected to the mainland by a bridge. So it's as good as being on the mainland, but you've got the advantages of being, it's like on the inland side of Bribie Island, so it's not the surf beach side, it's on the Pumice-Stone Passage side, which has some advantages. I think it's been a while since I've been there, but I think it's sort of like a canal type suburb. There's waterfront real estate there. Median house price $575,000. Doesn't have a very flash long-term growth rate. And again, markets that are kind of purely lifestyle, retirement, and there's not locally sort of major economic drivers. They do tend not to have, fantastic long-term growth. You compare Banksia Beach long-term growth rate, that's the 10-year growth average, 2% per year. And recently we were talking about down market Gagebrook, suburb of Hobart, 8% a year. Now, if you gave most people a choice, would you like to live in Gagebrook or would you like to live in this lovely waterside suburb on Bribie Island? Most people would probably go for Banksia Beach, but as an investor, if you'd spent your money 10 years ago in Gagebrook as opposed to Banksia Beach, you would have had much better capital growth by far. And therein lies a lesson about real estate investment. Big difference between buying, a home in a lovely area where you're going to enjoy the lifestyle as opposed to buying an investment property where you're going to get capital growth because there's lots of drivers and you're going to get a good rental return as well. So, yeah. Thanks for the question, Alison. It's another one that, the answer to which provides some fundamental lessons about property investing. Just the fundamentals. Different criteria, buying a home or place to retire as opposed to buying purely for investment. And the latter needs to be approached dispassionately, remove the emotion from it, look at the numbers. A lot of people would be put off buying in a suburb like Gagebrook because of its reputation, or in, say, Nambour, inland from the Sunshine Coast. Got a reputation of being a bit daggy and down market, and people make jokes about it, but it's a really good performer and it's affordable and it's got great infrastructure. And people buy where they can afford in areas that have good infrastructure and are close to where they work. And those are the fundamentals that are really going to drive growth far more than, hey, it's got waterfront real estate and it's a great lifestyle and you can walk to the beach. Not necessarily going to show great capital growth. I mean, in Australia, those sorts of places are a dime a dozen. There's no scarcity factor. So always keep those fundamentals in mind when considering where you might choose to buy as an investor. Okay, so we're almost coming up for the hour, and I do have a bit of a time constraint on me tonight. Normally, if live Q&A, I just keep on going beyond the hour as long as the questions keep coming in. But tonight, I do have a time constraint. So we've just got a few minutes left, and then I have to shut things down and go and do something else. So last chance if you've got some questions. And again, thanks for the question. It's been a really good variety of questions, and a lot of questions that have opened up discussion about some of the important principles about investment, as we've discussed for the last 50 or so minutes. So, Sunil, would a house on Sunshine Coast, specifically Caloundra, be a good investment? What's the ideal range to target? We're actually, Sunil, we have been talking about the Sunshine Coast earlier, and yeah, I think as a region, one of the best places to consider a compelling growth economy. I do like Caloundra. A few years ago, it was considered the sort of the daggy end of the Sunshine Coast market. It did need to be gentrified, but it has been. I mean, the lifestyle factor on the Caloundra area has increased enormously. It's now a really good place to go. The main street has been upgraded. There's lots of good places to eat. The beautiful waterfront areas. There's boardwalks where you can walk along multiple beaches. Lots of lovely little beach enclaves. It's actually one of my favourite parts of the Sunshine Coast for all those reasons. But still one of the more affordable ends of the Sunshine Coast market. So I think it's a great place to consider. I mean, there's some beautiful outlooks over beaches. You've got Pumice-Stone Passage, or the still water. You've got the surf. You've got views of the Glasshouse Mountains in some cases. Yeah, really good place to consider. So Sunshine Coast generally, yes, definitely. A strong market. It's on our national top 10 at the moment. And certainly there are worse places to consider within that region than Caloundra. So, but in terms of price range, well, I'll just put in Caloundra. It's primarily an apartment market, that particular suburb, although there are some houses. Caloundra, median apartment price, 450,000, 153 apartment sales in the last 12 months. So quite a busy market, affordable. You probably buy an apartment there at that price with a nice view of the water somewhere. But there's lots of different suburbs in the Caloundra area. Kings Beach, median apartment, it's an apartment market, 430,000, 144 sales in the last 12 months. Let's try, say, Moffat Beach, which is part of the Caloundra market. More houses there. Median house price about 800,000. It's grown 10%, 10.5% in the last 12 months. Again, an indicator that there's been some good growth in the Sunshine Coast market recently. So, yeah, definitely worth considering. When I've raised the question a number of times, considering a location, is it the absolute best place I can invest in Australia? I think one of the answers to that question right now is definitely the Sunshine Coast, generally speaking. And there are good reasons why Caloundra would be worth considering. There are other places as well. I'd particularly like to be close to where the major infrastructure, like the medical hospital precinct, is, not far from the university, perhaps more central, where they're building the new CBD, somewhere, one of those suburbs up around there, depending on your price range. Good places to consider. Okay, we just clicked over to the hour. I do have to move on. So cutting it a little bit shorter than normal. We've gone for 60 minutes, and we've answered a lot of questions, and we've discussed, in the course of doing that, a range of really important issues that investors need to keep in mind. So thanks for your participation, everybody. Lots of good questions, lots of interesting areas that you've asked about, and many of those areas have thrown up discussion about principles like the importance of vacancies, the fact that down market real estate can show really good growth if it offers affordability and proximity to desirable things. And yeah, I'll just repeat it one more time to end with. Whatever area you are considering as a property investor, always ask yourself this very simple question: is this the absolute best place anywhere in Australia that I can invest my hundreds of thousands right now? And if you can't answer unequivocally yes, then maybe you need to reconsider. Okay, that's it. Live Q&A for this month. Thanks for your participation. We'll do it again roughly the same time next month, but it'll probably be on a Wednesday evening. And don't forget that tomorrow night, Wednesday evening, the live webinar, the virtual summit, where I'm going to be talking to a range of experts about various topics, looking ahead to what you might consider doing as investors in 2020. That's it for now. Bye for now.